Break the numbers down. John Rutledge is the chairman of Rutledge Capital. He's back. Gary Hager is the founder of Integrated Wealth Management. Also back with us, our Fox Business contributor Charles Payne and our Fox Business senior economist Mark Lieberman. And of course, as you know, I asked Mr. Rogers to stay with us. John, what's your initial reaction to the number?
Boring. It's what everybody thought it was going to be, but you know, the economy sucks right now. Nobody's buying anything. People are hoarding cash. They got scared to death in September, and as Jim was saying, the real story right now is not a GDP story, it's what's happening in the capital markets, where we're basically having a wealth tax to destroy wealth in order to fund these huge bailout plans. And nobody's mentioned in a long time things like Social Security and Medicare, the numbers that go up as far as you can see. And so we're diddling around with stimulus packages is not going to fix this issue.
All right, so John, you heard what Jim had to say about this, and I see you agree with a lot of the points.
The last time I argued with Jim, I lost a lot of money, so I've learned my lessons about that.
Wow.
Yeah. Hey, there you go.
Yeah.
But you know, Mark, in addition to this GDP number this morning, we also find out about this $800 billion new facility here between the Federal Reserve and Treasury to backstop all kinds of lending options and buying government loans and Fannie and Freddie, and I don't know.
But part of this reinforces bad behavior, because we got into this because of a lot of debt and bad lending decisions made by banks. It's a consequence of too much of a money supply, which is kind of the opposite of what happened in the run-up to the Great Depression. You know, in the run-up to the Great Depression, the Federal Reserve did not increase the money supply. Here, they may have increased the money supply too much. They certainly did it in leading up to the housing loans, the mortgage loans. We've talked about this before. The more flush that banks are with cash, bad loans are made in good times. The more cash banks have, the more they try to lend out, and they keep going down, down, down into the credit pool.
You know, Jim, one of the things that worries me is about what we owe to places like China and how much bigger that bill is going to get. What about the fact that our savings rate in this country is just a fraction above 0%? How do we change our methodology?
What you do is you make people fail if they fail, and then people will start saving again. Right now, if you say it doesn't matter, we're going to bail you out. If you can't pay your mortgage, we're going to pay the mortgage for you. If you can't pay your student loan, we'll pay it for you. Nobody's going to save in a time like that. And Alexis, I don't know why you bother with these numbers, these GDP numbers. They're all made up. I mean, it's a bunch of lies that's coming out of Washington. I know it's television. You got to have something to talk about. But these numbers, I ignore these numbers completely. They're useless.
Jim, you cracked me up. You're living in Singapore.
Yes.
And you made a decision to move there. Tell me why you made a decision to move there and what it is about the people there that you believe that's where Asia is where we need to look next.
Well, Asia's the future. I mean, that's where the money is. First of all, the largest creditor nations in the world are China, Japan, South Korea, Taiwan, Hong Kong, and Singapore. That's where the money is, and that's where it's a dynamic future as far as I'm concerned. I got two little girls who were born in 2003 and 2008. I want them to grow up speaking Chinese, and I want them to know Asia. So, for me, it was a very simple decision.
Plus, he's tall in Singapore.
Well, I used to be tall. No, I used to be tall before I went into the stock market. I hadn't gone into the stock market. I'd still be tall. I had a haircut. I had a haircut. That's exactly right.
You know, Gary, I was looking at some statistics dating back to the Depression, and I think the market had peaked in 1929.
That's right.
And the next time we actually broke that peak of early 1929 was not until 1950.
Yeah, 54.
54.
Is it 54?
Yeah. Uh-huh.
So you tell me.
But again, what you're doing is...
Are we reliving this scenario?
You're using an index, and you can't just measure growth against an index, because if all you do is look at the index, you miss out on all the individual components that obviously did a lot better.
But a lot worse, too. When something goes bad in the index, they just take it out. And they put something else in that's good.
Well, Jim, now you're kind of negative on just about everything today.
No, I'm wildly bullish on a lot of things. Didn't you just hear me? I'm saying I'm wildly bullish on Asia, wildly bullish on China.
What about in the domestic United States? Anything?
Yeah, farming. So listen, if all these people who got MBAs should turn them in and get farming degrees. I am wildly bullish on farming. I'm wildly bullish on mining.
What do you think about Boone Pickens' plan? Just as an aside, T. Boone.
I think it's brilliant if he can pull it off. No, I know he's got a self-interest, but who cares? All great entrepreneurs have a self-interest. Otherwise, they wouldn't be doing things. No, it'd be fabulous for the U.S.
And I happen to agree. I think the infrastructure side, see, I think there's kind of a disparity between
government spending and not spending, and Jim's side of letting it fail. My original position on let GM go. Let them restructure. They're saddled with enormous expenses that how could they possibly get themselves out from under? So if what we do is provide them with capital to basically keep going, I think there is a strong argument for it's more money down the rat hole. Can they really come in with a business plan that the U.S. government, with no knowledge for the most part, other than looking at the flash of the plan, say, is this really going to work?
That's what's great about this story about GM, because the Journal headline this morning is tough love for the automakers, because Congress is sending them home, making them come back with a plan. I mean, he's forcing them to do a spreadsheet exercise.
Yeah, how did they not show up with a plan?
What's so tough about that?
You know, how are they suddenly going to come up with a business plan to go into the black? Have they been sitting on this and not using it?
Yeah,
I mean, that's kind of dumb to be saying they're running a business with no plan to make money.
First chapter in a book I wrote in 1989 was called General Who, and it was the backstory about the breakup of General Motors. This is not a miracle, what's happening. GM had a 61% market share in 1961.
That's right.
And they died. They got beat.
You also have to look at,